analogy you want to dip into your bag with. Hopefully the three boys will have lots of them for us this morning. We had a fairly barking barrage of commentary yesterday that was all about the strategic geopolitical conspiracy, the rise of the Arab world against America, and all sorts of jargon like that. I just think it's simply supply and demand outlook myself. China isn't the king that it was meant to be, but we welcome the commentary from the team today, and we're going to kick off with none other than the amazing Clyde Russell, sitting as close to China as you can be down there in the South Pacific, but not quite far enough away, I suppose, is what you're thinking these days, I'd say. But nonetheless, we welcome Clyde Russell, Asia Commodities and Energy columnist from Thomson Reuters, who's, you can nearly see the tips of his fingers there bleeding a little bit. He's been banging the typewriter so much over the last 48 hours, I can't keep up with his columns. But the one I'm going to draw to is not today's column, but yesterday's. The shock output cut sort of signals that the bullish oil demand view is uncertain, which I'm picking up on in my opening comments. Clyde, your thoughts 24 hours later on this decision by OPEC to essentially shock the world?
Well, I think there's two things that I would say about this. The first is a short-term thing. OPEC wants higher prices. I mean, always go for the simplest explanation for things. If you're ever given a choice between a conspiracy theory and human greed and/or stupidity, go with human greed. It always is the first horse home. So I would say, they just simply want higher prices, and they've acted to make that a reality. They've got what they wanted. We got $5 up. Whether that sustains or not is a bigger thing. The second thing is, well, why did they want this? Because let's be honest, OPEC are exporters. They see what's going on in the physical market probably before anybody else, because they get requests for, from their customers for how much oil they want months in advance of that oil
or don't want.
Shipped. So I'm guessing, I mean, logic tells me that OPEC sees that demand isn't actually as strong as they thought it was going to be. And that really is part of the story. So, yes, they're acting to boost prices, but if they really thought the world needed that extra 1.1 million barrels a day that they're just taking out of the market, then they wouldn't have needed to do that, because the price would be going up anyway. So it's really got to be a demand story that they're not seeing the demand coming through.
Richard Degoglia, as Chief Executive Officer at Matrix Global, on the whole other side of the world, sitting in Southern California. Richard, what's your read 24 hours later? Clearly, this would have scared, you would think, the shorts out of the market, the surprise, the suddenness of it.
I think that's exactly right. I think there's two things to look at, and one of them is almost, we talked about derivatives earlier before we got on. I think this is exactly right. Who wants to be short? The market is in perpetual backwardation. If you're going to sell something, you've got to sell it forward at a significant discount. If you saw the spreads today, I think the 1 to 12 month Brent spread moved $2 into deeper backwardation. And so I think, and what Clyde said is probably right. They didn't see the demand, but what OPEC is doing is I think is sending a message. They're saying, you're telling us 10 years from now you don't want our oil, and we're going to maximize our profits. One of the greatest things I think has happened in the past 5 or 6 years is just this, is the ability of information to be synthesized so quickly. We know what demand is all the time. We could look at every airport in the world and calculate what demand is. We have cameras everywhere to tell what road traffic is doing. And so when you understand what demand is in real time, and if you think about it historically, it has been the miscalculation of demand relative to supply, which has led to significant problems in contango and backwardation. On top of that has always been the ability to cheat, right? You're always able to get a cargo here and there. And we probably have that now with the dark fleet that exists. But when you look historically, Kuwait was allowed to cheat. Iran cheated. Venezuela cheated. You didn't know where cargoes are going. Well, now Kepler just calculates where these are going. And so I think it's, in my mind, it is something that Saudis and OPEC is saying, we are going to manage price. We're going to make sure if you get short, you could be punished. What we saw just recently in the Commitment of Traders report, which I think is an interesting way to look at who's long. I think the length in the market's the lowest it's been since 2016. That's a long time ago when as far as speculative length in the marketplace. And so I think there's room to run. Will it hold here? I think so, but we're just we're kind of shifting the value back up again. And OPEC is saying, you know what? We're boss. We're in charge of the marginal barrel supply. We don't think we're going to see a significant amount of Permian and U.S. production coming online. The energy transition is in full force. The banks are in control. The money's not going to flow to upstream. And I've said this, and I'll say it again. I said the last couple of years, I don't think the problem is now. I think the problem is 2 to 3 to 4 years down the road. When what is demand going to be? Is it going to be 105 million barrels, 108 million barrels, 112 million barrels? Where those barrels are going to come from? And what MBS and I think his minister said to us, we are not going to be there. So sorry, we're not going to be there to always give you the extra barrel. And maybe this is just the first chapter of that book.
Henning Gloystein, Director, Energy, Climate and Resources at the Eurasia Group. Henning, when you and Ian Bremer and your buddies sit down at the end of the week to, as Ian does post, I think every week, to sort of what you need to remember about what just happened this week, will this get on the top 3, top 5 of the list when you've got Finland joining NATO today and all sorts of other things, Mr. Trump being in an orange suit and whatever else? Will this feature at the end of the week as something in your top 3, 5 things?
I think so, Sean, yes. To be honest, we didn't expect this last Friday. In fact, we were pretty sure this wouldn't have happened. I totally agree with what Clyde and Richard said. They saw weak demand, sure, but we thought that they would let it slide a little bit and see, for a little bit longer and see what happens, but they didn't. But so yeah, I mean, you can see by the price reaction that it's been pretty brutal, and because so many the government reaction, the US has been is very unhappy about it. We know China is not very happy about it either. So yeah, I think it would make that list because it's a big move. We were about to think about saying like, okay, we actually don't think that super tight second half of this year might come because the demand situation looks so weak, especially China. The 5% growth, even if it happens, is pretty timid. US with the lending problems, growth will probably undermine. EU's weak as a kitten anyway. So we thought like, well, maybe we have to rewrite our second half of the year forecast and say like, actually, there might be a surplus, but we don't need to rewrite that now. So I think it's going to make that list, yeah.
Clyde, looking at the response, you know, a lot of this, the narrative of the last 24 hours is the sort of instinctual headlines position this as a sort of Riyadh versus Washington thing, and it seems all of these sudden and unexpected decisions, and sometimes when they're not sudden, is positioned in that geopolitical vortex. What are your thoughts vis-a-vis where this plays out? Like Henning mentioned, China not happy about this either. Where does China sit on these sorts of moves that are obviously impact the whole world, not just Western markets?
I think the one thing that is always fascinating to me is we exist within a Western framework. We consume Western media. We think like Westerners. We are Westerners. I mean, you would expect that. The Chinese do not think like Westerners. They don't act like Westerners, and they don't consume Western media. So they exist in a completely different paradigm. And I look at what they actually do, because they say very little. I mean, the Chinese have lots of oil in inventories at the moment. We know that in the pandemic, they bought up vast quantities of cheap oil. Even last year at high prices, they were still adding 700,000 barrels a day to storages, according to what I've calculated. So we know that they've got lots of oil. They just don't talk about it. So what I expect to happen is if oil prices move above $80 and to $100, like some of the Western investment banks are expecting, I expect the Chinese will simply cut back on their exports. They won't drop them dramatically. They'll just not take the extra. They'll not take a lot more than the sort of 10.5 million barrels a day that they need.
Even the cheap Russian stuff?
They'll take as much cheap Russian stuff as they possibly can, don't get me wrong. The barrels that they'll cut back on will be from the Middle East predominantly, because those are the more expensive barrels. So that's what they'll cut back on. We tend to frame this sort of discussion in a sort of the Biden administration's unhappy with the Saudis and the rest of OPEC Plus. I imagine that Beijing is furious at them as well. But they're not going to come out and say that, and they're not going to leak to the media. They're just going to carry on doing what they do. They'll make a decision and say, well, if that's what you want to do, if you think you can drive oil prices higher, then we're just going to, within our allocations, take less from you. And that's what they'll do. So I think it becomes very key from the sort of that May, June, July period onwards to actually see if China's imports of crude do accelerate as the market is expecting or had been expecting. And if they do accelerate, where does it come from? Because I'm going to take a wild guess. It won't be extra. If they do take extra barrels, which is now iffy, but if they do take them, they won't be taking them from the Middle East. They'll be taking them from everybody else first.
Richard, when I sort of was preparing for the podcast this morning and I was looking at the price of Brent, it sort of twisted me into a deja vu. I saw that $85 and I was like, whoa, is this February or is this now April? It sort of felt like we had, gone in a time machine back all of a sudden because it happened, from 75 to 85. And it feels in some ways, I referenced that because I wanted to get your views on everything else that goes along with that narrative, i.e., we've sort of gone back in time to the pre-banking crisis in the United States and Europe, where Fed rates and tightening and economic decline and all of these things were the dominant narrative. As we rush forward with this cut on OPEC, this accelerated, unexpected cut, does that reflect the accelerated journey, do you think, towards recession? Does it reflect higher rates that we get back to the Fed and others now, sort of after the banking crisis, back to tackling inflation with a robust sort of sledgehammer? What are your thoughts on that?
Yes, well, there's a lot to unpack there. I think going back to what Clyde said and what the Chinese have done, let's not forget that the U.S. decided to sell 200 million barrels of SPR crude that got us absolutely nowhere. All it was a political ploy to get gasoline prices down.
Well, let's not go too back far.
No, I don't. But I want to say that because remember, there was a discussion that there was going to be a put in the U.S. government. The U.S. was going to step in around $60 million and going to start buying again.
Yes.
That's all gone away. So to Clyde's point, and I take it very well, is the Chinese aren't going to do it. They bought what they do, and they're not going to tell anybody about it. But
well, the interesting thing about that is that the U.S. government said they were going to buy at, I think, sub 70 on WTI, and OPEC they didn't, and OPEC Plus said they weren't going to change output strategy until the end of the year, and they did. So it's sort of all of these big actors, you got to take them at a grain of salt now moving forward.
Right. Let's not believe everybody and let's just look at their actions is probably what we should do and what we should always do. Right. I think that's one of the major things.
Yeah.
As it relates to inflation, you make a very good point. I mean, I was looking at data on drilling. Where there's inflation, there's inflation in the oil patch. I think it's up 10 or 12% now. So we're seeing it. Inflation is here. It's going to be this is inflationary. I live in California. The gasoline prices now are hovering towards $5.20, $5.30, $5.40. They're starting to move up. We are the EU, right? We're doing this. Our laws are the same. What we're seeing in the EU as far as the combustible cars being outlawed in the year 2035, and so it is inflationary. The question is, what are we going to do about it? Well, in the case of California, they're going to decide to put together a windfall profit tax on refiners' profit for gasoline prices to get out of control. So I think what we saw and really what the SVB and the banking crisis did was wipe out a lot of longs. That's really one of the things that happened. That was most of the people I talked to had a kind of a bullish view of the market. It was going to move down, but ultimately we're going to see a second half that was going to be a little bit stronger. They all got wiped out. That was a 3 or 4 day wipeout, which is back to my point before, was the commitment of traders showed the lowest positions of longs since 2016. Think what happened in 2016. End of 2016 is when OPEC Saudis finally said enough. We want to come together with OPEC Plus, and that's what led to kind of where we are now, I believe. And so I think inflation is still here to stay. Obviously, higher energy prices contribute to that, and I think we're going to see it across the energy spectrum, not just in oil, but in LNG and other forms of energy.
Henning, I wanted to get your thoughts on the other stories today. Obviously, I mentioned it earlier, Finland joining NATO. That's a pretty significant moment in the history of Europe, at least. And at the same day in which the sort of right of center party in Finland has won the election. Is it a big day? Is this a big moment in the sort of European standoff with Russia and the whole change of that posture?
Well, I mean, it doesn't change the conflict and Russia's invasion of Ukraine on the ground in the slightest. Let's make that clear. But it is a huge moment. Finland is a traditionally neutral power. Finland, although its population is pretty small, has 300,000 persons under arms and has a very capable military, and it's got a really long border with Russia, which is probably a bit scary for both sides. But if the key thing is, because Sweden at some point will join also, it's a complicated moment with Turkey, between Sweden and Turkey. But what this will mean is that the entire Baltic Ocean is going to be surrounded by NATO countries with two little enclaves, and that's Kaliningrad and St. Petersburg, but the rest is going to be NATO. And that for Russia is a very uncomfortable moment. So yeah, it's a really big moment. The elections, that's a bit awkward, I guess. The government that brought in Finland into NATO very popularly has been booted out on the day that they achieved what they wanted. It's a bit weird, but this happened to Winston Churchill after World War II as well.
Well, they might get in they might be in there long enough to enjoy the photo op today. I don't think the government changes literally overnight, because true, yes. they will have a pretty. The winner only won 20% or a little over 20%. So there's a serious bit of horse trading to go on vis-a-vis.
The Social Democrats might actually be in the government as a coalition partner as well. So it's not that radical a change. That's very true.
Yeah, there's a lot of negotiations still to go on there. Clyde, I wanted to get your thoughts on where do you think this leaves OPEC Plus, the surprise of this action from the point of view of it happening outside of OPEC Plus on the Sunday with a few members that can actually do stuff. Was Russia in it or out of it? Russia had already said they were doing the 500 thing anyway. They'd done it earlier in the year and had announced already that they were going to keep it going. I just wanted to get your sense on the coordinated nature of this, as what it tells us about OPEC Plus as a unit.
I think it actually shows that OPEC Plus is still working remarkably well, despite their sort of disparate backgrounds and interests and, geopolitical concerns. They, as a group, are actually holding together very, very strongly. Even though there's a lot of people who would like to see them sort of stumble and fall out with each other, that hasn't happened at all. I think the fact that they went for a surprise production cut, I mean, that's an obvious play to do if you want to shock the market, if you want to have an impact on prices. The bigger the surprise, the better. So I think it was, in some ways, an incredibly smart play by OPEC Plus, because what they actually said is, we're still a factor. Look what we can do. If we want to tighten supply, we're going to do it. And they did. And I think that is, anybody who is sort of sitting in the crude oil market, be it a trader, be it an investor, everybody now has to take cognizance of the fact that OPEC Plus can surprise you. But what is not surprising is that they're acted in their own interests. And I think as long as they can sort of manage their own interests together, we can see this sort of thing happening. Let's assume that demand actually is going to be as strong as the IEA and OPEC Plus said it was going to be. Let's assume that actually the second half sees a roaring, increase in demand, led by China, but also India's quite strong in there as well. Will OPEC Plus then surprise the market by increasing output? I mean, you couldn't rule that out, but it's certainly interesting. What they actually showed is that they're still a factor. They have to be taken seriously, and ignore them at your peril.
Richard, just picking up on the other story today, I'm not sure where it intersects with the energy markets or if it does at all, but it's obviously noteworthy. The first time in U.S. history a former president will be indicted. Should we care? Is it just sort of distracting more noise from the American body politic, which looks pretty dysfunctional? Or is there something more serious to be paying attention to here?
I think we're just dysfunctional. I think that our policies, any readings of what he's being indicted for, it's a federal offense because of a payment to to some woman that he says they supposedly had an affair with, and I think it sets extremely bad precedent to try to indict a former president. It's just very, very bad form. He will not be found guilty, but there's more to come, right? Trump is disliked around the world by everybody, and this is just another means of going after him. I think it's a very, very, very bad way, though, to run a civilized democracy where you're trying to put prior presidents in jail.
Okay,
everyone's not equal. So, but I don't think it matters in as far as it does the economy. I don't think it matters relative to energy. I think it's a toss it aside. I don't think it really matters at all.
Looking at the sort of what does matter, I suppose, from our narrow universe or sort of world that we're looking at here, is where does the announcement by OPEC Plus impact U.S. oil production, or does it? I mean, one of the great surprises, I suppose, continues to be a surprise in the years after COVID, that the U.S. oil production is still not got back to pre-COVID levels. Does this move by OPEC Plus must have been celebrated in Houston? Does it translate into anything more than champagne popping and bigger dividends?
I don't think so. I think that, and I was just in Houston for the 40th anniversary of the WTI contract. So that was, that's kind of a watershed moment. I happened to be there day one of that contract when it started, but here we are. And the feeling in Houston that I got from most of the traders I talked to were one of, they can't really believe how this transition is going, and it's going to end very badly. It's going to be great for the oil price right now, but the banks are not lending the money. They're not going to lend the money, and the money's not going to be spent looking really beyond what they are going along. We're kind of bumping along in like 12.2, 12.5. I've heard some numbers that maybe bump up a little bit, but this is the first time that I think we've seen in my life where there is a push to push prices higher, but there's not a supply response. We've always had a supply response. OPEC's not done this. This is not the first time they've done this. You go back to 86, 92. You can go back to many times where OPEC has adjusted their production to cause the price to rally. And when the prices rallied, there was a significant supply response. I don't think there's a supply response anymore. The U.S. is going to produce what it's going to produce. The rules are against increasing production. The laws are that way. The tax laws have changed. And so I don't think we're going to see a supply response, both from, as I said earlier, from an inflationary perspective on getting work done, but also from where banks are and what they're going to do as far as lending. The banks aren't lending, and they're not going to.
Henning, one of the other surprises alongside U.S. oil production not recovering is the opposite, the sort of a counter image of the European economy not collapsing. I mean, we have the DAX at near record highs. The stock market actually rose yesterday. The European stock futures trading up this morning in early trade. Where is the European economy when all of these pieces are put together? Is the battle against inflation over? Is the rate hikes we've seen, the ECB last did a 50 basis point? Is that it? What's your sense of where Europe goes?
I mean, so the DAX reaching record highs is also an indicator of how it underperformed in the last decade versus especially American equity. So I wouldn't, and I'm also not an equity expert, but this is that does. But
it is a sense of optimism in the European economy. Yeah. I mean, that's the bottom line, what it represents. I mean, it might be the fact that the euro is cheap.
So what definitely has changed is, and you mentioned this, last year there was the view that the entire European industry would totally collapse, it'd be an industrial crisis. Then what happened is, despite a 25% by industry reduction in gas consumption, its industrial output actually grew by 1.9% across the European Union. And since then, in January, February, orders, they're not great, but they've kind of improved as well. Gas prices are down sharply. They're still higher than they used to be, but the industry has adjusted quite significantly. So they're kind of moving from emergency management to long-term adjustment. That long-term adjustment is going to be painful, and it's going to cost a couple of hundred billions of euros again. But they'll manage. The money's there. Germany's a wealthy country. The Netherlands rich. The entire EU has a lot of money. The green industry plan's there. So it'll work, but it'll come at incredibly high costs. And there'll be more fiscal pressure. There'll be new debates on who's going to pay for all this. classical EU debate's going to come up there, north-south. There's going to be the winners. The North Sea basin looks very strong. Southern and Central Eastern Europe landlocked. They don't have access to all these LNG terminals, to all the fancy offshore wind parks coming. The hydrogen stuff isn't really happening there. So there's actually the strengths and weaknesses within Europe are being amplified by this. And this is going to cause more stress within the EU. And on top of that, the EU, of course, has to compete with that juicy US Inflation Reduction Act that's been released. The Canadians are kind of part of that as well. So it's a competitive environment, but I share the cautious optimism of the market at the moment, because Europe has avoided a recession this winter. Winter's over now. It'll almost certainly avoid energy shortages next winter. We'll have to see about the recession part. So I think there is some sense of optimism.
I wanted to have a quick follow-up on that, Henning. We have Ursula von der Leyen going to China this week. We have, I think, also Macron in China this week, the Spanish Prime Minister there the other day. Where is that sort of China-Europe relationship going at a time in which America's, it would appear, trying to get Europe to back away?
Yeah, this is a really important aspect, because the EU is clearly not as bipartisanly anti-Chinese as the US is at the moment. There's a strong will within the EU, whether it's in Brussels, Paris, or Berlin, or Madrid, or Rome, to continue to do trade with China. The EU and China are each other's biggest trading partners. This is important to be aware of. So they don't. Neither side wants to destroy that relationship. At the same time, we did see Ursula von der Leyen last week give a speech in Brussels where she said there has to be more strategic independence. By that means on China. By that she means of critical raw materials and trade dependence. So it's a really, really thin balancing line. And of course, depending on who comes to power in the United States next year, this could become a lot more feisty again for the Europeans. So this is one to watch, because it's a really complicated issue.
And particularly as China backs an opponent who's driving a wedge of war into Europe. It's a difficult circle to square.
Absolutely.
Let's get the survey question in and come back to everybody. One last comment. OPEC plus sudden and surprising action to cut oil supply will succeed in scaring shorts out of the market. Perhaps I should ask that yesterday.
Yeah,
we're asking it today.
Yes.
That's a softball. You know, you already know the answer. You know, everybody gets a trophy. You know, Clyde, the other question that we're asking, obviously, we've touched on, but we will have to wait to, you know, what's the next shoe to drop here? We have the IEA came out with a fairly muted statement yesterday saying, well, we said it was going to be tight already, and now it's going to be really tight. But I'm wondering your expectations. Do we see the likes of the IEA and others have to come out and revise down this demand outlook that is, you know, set to, according to existing forecasts by the IEA and others, to see demand in the second half to grow up to 2.6 million barrels a day? So you would think 1 and 1 isn't 2 here anymore.
Well, I think we've actually, you know, that is probably the key, is demand going to be that strong in the second half? It's certainly not shaping up to be particularly strong in the first half. Asian imports are kind of flat for the first 3 months of the year, nothing happening there. So we have this huge expectation of a really strong second half baked into virtually everybody's forecasts. So if there's a risk that something goes wrong, it's within those forecasts. And my reading of the OPEC Plus decision is they see that risk and they're taking a preemptive strike to it. Well, how long it will take for everybody else to get there, I'm not sure. If you actually look at the investment banks, some of them have been upgrading their price forecasts rather than lowering their demand forecasts. I think with the world still teetering economically, I think, to me, you know, you're more likely to see demand fall. Well, not fall, demand not meet expectations.
And hence you would expect that forecasts by reputable agencies like the IEA will have to be revised downward, or else somebody's got this really wrong. Richard, your thoughts again, and I wanted to sort of see if we get a bit more of a focused answer. Like, where is the US economy now post-banking shock and interest rates cycle. Where are we? What's your thoughts?
We're
What's next
holding.
for the Fed?
We're holding on. We're holding on. I mean, I think the Fed is probably going to do another 25 basis points, but we're holding on. I mean, we've got through this banking crisis. The water's been smoothed out a little bit. The stock market is moving back up again. Everything seems okay. It seems that everything is in order. One of the most important things that's happened, you guys might not be aware of this, but they've changed the rules in baseball. And opening day was the other day, and they changed the rules now. So a normal baseball game, which used to be 3 hours and 5 minutes, is about 2 hours and 10 minutes. So you have
entire. Lord, that's surely must be some sort of cultural crime.
It is done. It's fantastic.
That's like from 3 beers to 2 and 4 boxes of popcorn to 2. Or
it's very problematic for people who like to eat at baseball games. But after going to 2 this week, but I think we're okay. I think America's pastime is okay, and I think that's maybe a good analogy. Baseball's coming back, and I think the U.S. in a way is kind of coming back a little bit.
But is the Fed done? Don't get it.
I don't know. You know what? I don't know. You're asking a guy in California, what is the Federal Reserve going to do? I think Powell knows he has to keep it's his boot on the neck of this. He cannot let get away. And I think this oil price increase does not help him one bit. He needs to slow this down. Inflation here is still everywhere. Everywhere you go, people talk about higher prices. The price of eggs, the price of chicken, the price of gasoline. Everywhere you go, the price of rent. You cannot get away from that discussion. I think it's said to me 2 or 3 times a day. Someone says, "Gee, that's expensive," and so that has to be in everybody's mind. It is the great equalizer.
I had a message from a friend of mine who lives in Hungary. He said inflation there is 25%.
Right.
Henning, last word with you. If we get the survey result, obviously the answer is pretty clear. The agree on that. From the point of view of where do you think, I wanted to get your analysis and obviously Eurasia's analysis of, we had Mike, our speakers on earlier in the week identifying that the number one risk before OPEC announced, but nonetheless, I think it remains the number one risk, that the war in Ukraine, Russia's invasion of Ukraine, could become something more significant as the spring emerges. Where's Eurasia on the outlook for the war in Ukraine as being a big destabilizing force in the first quarter or second quarter?
I mean, it's destabilizing already, and sadly, we don't think there's going to be a credible solution anytime soon. We're not military analysts, but the people we work with do say that Ukraine is expected to start an offensive pretty soon. The Russian winter offensive didn't go well. It caused huge damage to civilian and soldiers on both sides. The problem is that at this stage, both sides still think they can win, which means that there can't be credible cease talks when both sides think they can win. And the next problem is, even if there was some form of a brokered ceasefire talks, at this stage, there is no Venn diagram. So there is nothing one side is willing to give the other as an absolute minimum, which the other side thinks is a minimum they can accept. So there is no overlap at all at this stage. And that sadly means that there's going to be probably, as we've seen so far, a further escalation before we see anything else. And it's not. Well,
it is also the first escalation. I mean, coming out of the winter, in which the Ukrainians have tanks now. They have a lot of reinforced weaponry. Obviously, you would think Russia also has new weaponry that it's reinforced over the winter. But certainly, Ukraine has a bigger toolbox than it's ever had in this 14-month conflict. What will that mean? You would imagine it would mean a bigger fire that will burn in Ukraine.
And we'll think it'll be another mobilization on the parts of Russia.
Yeah. Well, we'll have to leave it there. Brent crude oil, despite all the drama, it's sort of deja vu, Groundhog Day, $85.40, where it sat for most of the first quarter before Silicon Valley banks decided to have a big wobble, and it's back to where it was, except OPEC are planning to remove a lot more barrels from the market than it had initially planned. We'll see where it goes from here. But after the initial pop yesterday, there doesn't seem to be a lot of wind in the sails of going higher at the moment. Thank you so much. It was great to have everybody with us. Obviously, Henning in Europe, we have Richard in California, and Clyde, of course, in Australia, all around the world, getting some insights on the trends and issues moving markets. Thank you guys so much. Have a great day, everybody.
Thanks,
All
Sean.
the best.
Thanks all.
Thank you.
Thanks, Sean. Bye, guys.